What are you seeing in the corporate appetite in general for deals against some of these macro uncertainties that we're seeing because of Brexit, but because of the trade war as well?
Look, I mean, investors are craving for certainty. I mean, clearly they want a constructive outcome with the trade wars. Everybody is waiting to see how Brexit pans out. But also there's an element of kind of a cautious glance at all the tensions in the Middle East, etc. So you have a bit of an ease, but against that you have a benign rate environment. So generally, when you talk to investors and when you talk to clients, there's kind of cautious optimism. But structurally, there's one point which is kind of here to stay, which is the declining wallet.
Yeah.
So if you take EMEA, for instance, it's roughly $20 billion or so, the average wallet. This year, we're down 20%. And we've seen this kind of gradual decline now year on year.
Yeah.
And what is even more stark is when you look at the UK, France, and Germany, the wallet is down 35%. Yeah. So there are some kind of headwinds, but really a benign rate environment.
But Viz, when you tell me that people are cautiously optimistic, I mean, our chief executives looking at profit warnings and saying, I don't want to invest right now, I don't want to IPO, I don't want to M&A, so they're pushing back some of that? Or are they saying, look, I just need to be more careful, but I'm still going to go ahead with my plan?
I think it's the latter. I mean, there is a sense of, investors are craving for growth. You've seen activism emerge now. I mean, it's become mainstream in Europe. When you look at the volume of M&A activity, I mean, this year has been pretty remarkable. We had $1.1 trillion of M&A volumes. Clearly, the U.S. has led the charge. 52% of volumes are in the United States. Europe has been around to 20% or thereabouts. But what is absolutely kind of relevant is the pace of activity doesn't seem to be, the level of dialogue doesn't seem to be pausing.
Is that because you're an American bank?
No, it is, even otherwise, when you kind of, you're seeing almost a proactive, given all the activists knocking at your door, there's proactive housekeeping that's happening. You're seeing, chief executives, boards looking at spin-offs, looking to, hive off non-profitable divisions.
Okay, but are they looking at and doing them, or are they just looking at them?
No, they're looking and doing them. I mean, you've seen, Nestle, with its skincare division. Yeah. You saw Unilever with its spreads business. So even the large ones are looking at it. The smaller ones are focused on it. But what is also very remarkable is the pool of money that is waiting to be put to work.
Yeah, I mean, that's what is it waiting for? What's going to be the catalyst for?
The catalyst is, say, private equity is going to be the biggest driver. So if you look at private capital available, it's about $1.2 trillion. Mm-hmm. And PE firms are raising about $500 billion every year. And when you look at the next wave, it's P2Ps. So it's basically public companies waiting to be taken private. So,
all right.
So you have a good mix of a lot of liquidity and a desire to see things happen.